The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how you doing? This is Darrell Martin here with the Diagnostic Trading Hour. And if you got any questions, feel free to go ahead and give me a call. You can reach me at 877-927-6648. Again, that's 877-927-6648. And as always, I like to do a market wrap for you to let you know where the market's sitting at right now. And just sort of go over everything. We've had some pretty big moves going on a little bit later. It took a while for it to get going, and looked like there was going to be some big moves, but not so much. And the downside, some of the markets were able to fill their gap. A couple of them were not able to fill their gap. And go ahead and do a wrap on those for you. We got the S&P is up 12.75. The Russell up 9.7. The NASDAQ up 34. And the Dow up 72. Looking over at copper, it is up 0.9, almost 1% on the day. We got gold up $25 on the day, just flying up. And it's just interesting how these metals are playing out with all the different announcements coming out. And we got silver up 0.772%. So a massive move in silver. We got natural gas up 0.024. It's about a 0.5% move. Probably be about 1% move by the time it's all said and done. We got oil up 51 cents right now. It's about a 0.5% move on oil on the CL there. And then always following that one because I'm looking at Nadex. Looking at corn, we got corn is down $11 on the day, so 1% move down, and those ags just keep on sliding. And soybeans only down 2 points, pretty flat on the day right now. Looking over at our currencies, we got the Aussie, looks like down about 80-something pips. We got the euro down 20-something. And we got the pound is down 54. And looking at U.S. franc, it's down 23. U.S. Canadian down 45. Had a short trade on that this morning, working out nice and well. And had a long trade on the NASDAQ, so I'm glad both of those played out. And looking at U.S. yen, it's down just a mere 8 pips. So not too much move on that one. And that's our basic market wrap. I'd like to go ahead and look at the fundamentals and the announcements that have come out. And on those announcements today, we had several things going on. Overnight, there's a few things happening over in the markets. We had some moves on, in Britain with their current account information. The Italian 10-year bond actually came in a lot better at 5.24. Previously, it was 5.82, 5.96, 5.82, 6.19, 6.03. It actually hasn't been this low since March 29th of the year. And so we'll see if that trend continues. But so far, so good. So the Italian bonds, again, coming in pretty good there. Core durable good orders came in worse than expected. They thought it was going to be 0.2, came in at negative 1.6. And the core durable goods, that's basically it's a leading indicator of production. It means rising orders. And without that happening, that's orders that you use for aircraft, and it's really volatile. But at the end of the day, it's not as good as expected. And then you see the market rise. Unemployment claims did come in a little better than expected. And they came in at 359,000 versus 378,000. Still, the number is way too high to be a positive. And, maybe a low, I guess you could call it a really good number considering it hasn't been that low since July of this year. But still, nevertheless, still breaking that 300,000 mark over and over and over again. And that's our two big numbers that came out. We also had a pending home sales that came out, again, worse than expected. So all this bad news got a market rise. Why? We're going to talk about that. So looking over at the pending home sales, basically on the pending home sales, the data came out about a week after the existing home sales. But remember, existing home sales have already happened. Pending home sales is ones that are about to happen. That's new and houses for sale, both. And on those pending home sales, and it has a big ripple effect. And basically it includes resales as well. And those pending home sales, again, came in at negative 2.6. And as expected, they come in at negative 0.4. And so that's pretty bad. Hasn't been that bad since May. And, and obviously a pretty big difference there in the expectation versus the actual number. So pending home sales not doing so well. Natural gas storage, a little bit more gas than they expected. And so you can sort of see that. That's a sort of a weekly Thursday play. And so when it came out, then gas dropped like it should. All right, so that'd be the expectation is whenever there's more supply that the price drops. It did drop, but then it decided to go ahead and move on up with everything else. Looking on over what else we got coming up today. New Zealand's going to have some information coming out. Nothing major. The yen is going to be releasing. Japan's going to be releasing a whole bunch of stuff. They got household spending, Tokyo Care, unemployment, industrial production, retail sales. I mean, they're just, like I said yesterday, they're just sort of getting it all out at once and ripping that Band-Aid off. So we'll see how that does on the yen. They also have their housing starts number coming out. And then tomorrow, what do we got on the docket for Friday? Well, on Friday, let's see here. We got, starting tomorrow morning, because we'll head off first with the housing starts over in Japan. Then we're going to have some German retail sales, some French consumer spending numbers. There'll be what's called the KOF Economic Barometer over in Switzerland. So that'll be a franc trade for you happening at 3 a.m. And that's 3 a.m., getting the time zone right, Eastern Time. And basically it's an index. It's designed to predict the direction of the economy over the following 6 months. So, but they do combine it with 12 other indicators, so it's not really a big surprise number. And then Euro's going to have their CPI flash number. But then Canada, here's your big number for tomorrow. Canada is going to have GDP month over month coming out, and they expect it to be 0.1. It was better than expected last month. It was worse than expected the month before. It's basically been back and forth. And basically it's the GDP is going to be how much output they got. And they're going to release that data every single month. And there's also, of course, a quarterly GDP that comes out as well. And really the GDP, as you probably know, is the broadest measure of economic health or lack thereof. So is their GDP growing or is it shrinking? And we'll be finding out. So that's a U.S.-Canadian play for you, bright and early, 8:30 a.m. Eastern, 7:30 Central Time. And we'll have a couple numbers here in the U.S. coming out tomorrow. Nothing major, but just the markets are so sketchy right now. We got the core PCE. We got personal spending coming out. We got Chicago PMI, University of Michigan Consumer Sentiment Report, and the HSBC. That doesn't really affect the U.S. But the revised UM Consumer Sentiment Report will be coming out. And all those come out starting at 8:30, and they go to about 9:55, and then nothing. So it'll be interesting just to watch and see if this market can keep climbing. But it definitely has had a big impact on the day so far and moved down. Russell almost filled its gap. Looks like IWM actually did fill, or almost filled its gap. Let's see here. If we go to the actual close, then we actually did get a close on the ETF itself. We did not get a actual close on, or a gap fill on the future contract. And then looking over at the SPX, and it did not come close. Spiders, they tried, didn't make it. SP Futures also did not make the gap fill, unfortunately, there. And usually a really good play. And like I said, did work out over on the Russell if you're looking at the ETFs there. Looking over at NASDAQ, came really, really close. And the closest ETF really you can look at is a Q. It's not exactly the same, but it's one nevertheless that a lot of traders trade. And then looking over at the final remaining one there, we got, let's see, we talked about Russell, we talked about NASDAQ, let's look at the Dow. The Dow definitely had a gap fill, and it filled that up. And we can check out the Diamond ETF, and let's see, that's taking a little while. There it goes. And Diamond ETF also filled out before skyrocketing on back up. So pretty interesting, though. I mean, everything gapped up and then gapped down, or not gapped up, but flew down, and then flew back on up. And pretty much everything moved up to like 1, 2, and even 3 standard deviation levels. And now that they're all at the 3 deviation levels, they have flatlined. So the Russell right there being right at that deviation level, and really not moving too much at all at this point. So what's going on? What caused this big move and all the markets here that we've seen? Well, a couple of things have happened, okay? One of them is we have just the you call it the dumb money or whatever, the money that's going without thinking it's just going in. And that's the 401k money on the payroll cycle. Starts on the last 2 trading days of the month, goes into the first, 3 trading days of the month, okay? And then it'll go from the 9th, 10th, and 11th trading day of the month as well. So that started today, and mutual fund managers, most of them have already rebalanced and allocated their 401k, or their balances, not their 401ks, but rebalanced their mutual funds. And that's sort of what led to the big decline after the week after triple witching that we've had so far. And so that money's starting to just flow in from 401k money coming in, going into mutual funds, then going into stocks. We got the Super 8 going on, so that's obviously helping out with that payroll cycle. That's what the Super 8 is. And then looking over a little bit further, we also see that we have, load balancing being done. And then, we have just a couple other things. One of the big things being Spain. Spain has all these announcements that's coming out one after another. And they're basically saying, hey, we're good. We're releasing our new budget, which everybody seems to like their new budget. And they're focusing on spending cuts, not tax hikes. And, that's a good idea. Maybe Congress will listen to that. But we'll see how it really turns out. But they think they're going to easily be able to meet their deficit targets because things have been going so well, despite the 25% unemployment rate. Anyways, but Spain has a lot of announcements coming out right now, and their bank stress test, all that other stuff. So just be watching that over, today and tomorrow with all the Spanish, because everybody's afraid that Spain is going to be asking for a bailout any time now. And so all this news seems to point that they're not going to need one. Now, the bailout fund is apparently ready, and they can use it, the regional bailout fund. And so if it is needed, they have it. But right now they're saying, hey, we're not going to need it. And that's supposed to be really good for the euro. But if they have to start printing money, that's good because they're saving from the fear, but it's bad because they're printing money. So you got that balance there of, how's it all going to turn out at the end. And that's sort of our summary on the news for today and for tomorrow. And doing a little outlook for next week. Before we get into that, I wanted to remind you today is the last and final day where you can register. So if you're going to be in Tampa, hop on over to TFNN.com if you're going to be here this Saturday and go to Free Live Workshop, click on Dynamic Trading Strategies, and you'll see the registration form. It is free because Nadex is paying for it. If you can be there, please do register and check it out. We'll be giving away a lot of free prizes. And we got silver, we got books, we got all sorts of fun things we're giving out. And Dan Cook from Nadex is going to be out there. Tom O'Brien's going to be talking about identifying the trend. I'm going to go in and I'm going to talk about diagnostic trading and really helping you understand the bull spreads and how they work. I'll go into the implied deviation levels a little bit as well. And then Tom O'Brien's going to come back, okay, once you identified the trade, now let's set up the trade and put it together. And then me and Tom are going to tag team on risk and money management and bring it all together for you. And we sort of did this last Friday on the Bull Bear Binary Hour. And go back and watch that archive. If you haven't watched that, you can see that over at Tiger TV. You can watch the archives there. And, basically me and Tom and Steve all came together, and we used the different ways that we all look at the market. And basically Tom called the price, deviations that I had called like, hey, we're at an extreme, we're going to reverse. Steve had a reversal signal put into play. And we did both a spread and a binary. So you can see the trade, sort of how it played out there. We'll be doing some of that and talking about the markets as it comes closer. And we'll be talking about that this coming week. And, just be there to answer questions for you and help you get a good grasp of this. Like one of the things I say is it's time to trade up to a new way to trade. We have new markets, and you need something that can help protect you and limit your risk and maximize your leverage. Stay right there. We'll be right back after this commercial break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're going to go ahead and do a little wrap on next week and talk about some of the announcements that are coming out. So what do we got coming out next week? Well, we have the unemployment rate going to be coming out over in Switzerland on Monday. Not really expected to be a big market mover. However, we do have the franc coming out on Monday and the CPI. They're going to be having that Switzerland. So the USD franc, 3:15 Eastern, 2:15 Central Time. And then New Zealand's going to have their New Zealander Business Confidence Report. And that usually does have a pretty big impact. So if you like to trade the New Zealand or dollar, New Zealand dollar, upon which I guess future forex, whatever you're going after, you can check that out. And then Japan will have their current account that night. So really not much of anything happening in the U.S. Coming up. Let's see here. Let me pull that up. I'll let you know. Let's see. We got a couple things. I think there is one thing happening. So let me back up. And yeah, we'll have the ISM. Okay, so we have a couple reports, but really the one thing that matters is the ISM. And so we will have the ISM on Monday, and that's going to come out at, let's see, 10 a.m. Eastern, 9 Central. And then don't forget the week after that, we actually have a holiday in the United States. So the markets will be chilling out on October 8th. And so anyways, we got that, and that'll become an ISM. What is the ISM? Well, the ISM is also called the Manufacturing ISM Report, and it's basically an let's see, how do we put this? They go there and they do a big survey. They survey 400 different purchasing managers, and they ask them to respond to rates relative to business conditions, like employment, production, new orders, deliveries, inventories, things like that. And it's a big leading indicator. So it usually does have a pretty decent impact. And you're looking for a number above 50. And so we'll see what the actual number comes out at. But right now it's forecasted to be right around 50. They haven't hit 50 since June. So we'll see if they are, the ISM on the survey there is able to hit 50 or higher. And then we're going over, and on Tuesday, we're going to look at the Aussie will have a couple announcements coming out. They're going to have their rate statement, and basically their Fed funds rate. Okay, will be coming out at 12:30 Eastern a.m. on Tuesday, so 11:30 p.m. Monday Central Time, and so that'll be a big Aussie dollar move. See if they do anything. Doubt they will, but if they do, then of course that would have a massive impact on the Aussie. They haven't changed their rate since May of this year. And scrolling over, we'll have the PMI on Tuesday in Britain. And the PMI, pretty similar, basically it's a big survey of managers about what they're, basically the future economic conditions and all, so looking for a move above 50. Britain will have a bond auction, not expected to be any market-rocking news there. And also we'll have trade balance later that evening. So really just, not a whole lot coming out. We'll have vehicle sales here in the U.S., but that, doesn't usually have much of any impact on the market, maybe a minute, and then it's over, unless it's just way worse than expected. So, but that's really not one of those ones you're just sitting there and watching and waiting with bated breath to see what comes out. On Wednesday, Germany is having a bank holiday, okay? So obviously Germany being a major financial force in Europe, that will have that will stunt the moves because there'll be less liquidity going on there. And so remember, Germany does have a bank holiday on Wednesday. And let's see here, trying to see if I have which one, called Unity Day. So, but they'll be having that holiday there. And then going over and looking at some of the other things, there'll be a few other announcements. Britain will have a PMI number come out also. Then it's going to become all about the U.S., all right? So we're going to have the ADP non-farm employment change number coming out next Wednesday morning, 8:15 Eastern, 7:15 Central. And about 2 hours after that, we're going to have the ISM non-manufacturing PMI coming out right here. And so just be very aware of that. Of course, crude oil. But ADP and ISM being big announcements, those are going to have a big impact on the market next Wednesday. Everybody's watching those numbers, those employment numbers. And that's sort of a big leading. We've seen some big moves off the ADP non-farm payroll recently. Next Thursday, some things for you to put on your calendar and check out. Britain's going to be announcing their bank rate. They're going to leave it at 0.5%. Probably. They've left it there for a long time, basically since 2009. So they moved it down to 0.5% back in, March of 2009, and they've left it there ever since. So not expecting any big change in the German bank rate. We may see a change in the Chinese bank rate, though. Anytime in the next few weeks here. So we'll find out and see if that happens. That'll be a surprise because China doesn't really give a lot of notice on much. Europe is going to have its interest rate also. So now that will be something people will be watching because they could drop their rate. They just dropped it as early as June to 0.75. If they see, the need to continue to stimulate, then they may drop it down to 0.5%. Right now they're at 0.75. So that's the one that could be moving on Thursday, and then there'll be a press conference right after that, followed by unemployment claims right here in the U.S. All right, stay right there. We'll be right back. We'll wrap up with next Friday.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. If you're a trader thirsty for knowledge, then we have the perfect event for you. Tom O'Brien will be hosting a live 4-hour dynamic trading strategies workshop on September 29th in the Tampa area. This one-of-a-kind workshop takes place from 8 a.m. till noon and is completely free. We'll even be giving away almost $2,000 in door prizes randomly drawn from those that attend live. Along with diagnostic trading expert Darrell Martin, Tom O'Brien will teach you how to identify and set up your trades using dynamic trading strategies, and Darrell Martin will teach you his diagnostic trading formula, including the strategy, system, and style that gives you an edge in this market. For more information and to reserve your spot today for the September 29th free Dynamic Trading Strategies Workshop in Tampa, please visit the front page of TFNN.com. Don't wait to act, as space is limited. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. Last thing we got to wrap up on the fundamental side is next Friday. What to be looking out for? Well, Japan's going to be having a big press conference, so we'll see what all they have to say. Canada is going to be releasing their unemployment rate, their employment change, their building permits, all at the same time. And then right here in the U.S., we're going to have two massively important numbers, non-farm employment change and unemployment rate. So Wednesday and Friday, really even Thursday, but Wednesday and Friday are going to be big days right here in the U.S. on the news side of things. And so that sort of gives you a quick wrap-up of this week and next week and what to expect as far as the market goes. So now let's go ahead and we talked about, one of the things we talked about earlier on the show was a seasonal tendency. And so how the triple witching week usually is a down week overall. And it's definitely doing a nice rally right now with the news coming out. And but it looks like so far we are still looking at a solid down week on pretty much all the indices, unless the market has a big rally tomorrow. So we'll just have to sort of see how that finishes out for the day. Most of the things are pushing up at their deviation levels, and we're just going to have to see, if they keep pushing those deviation levels, or if they decide to go ahead and pull back. I would be pretty shocked if they kept pushing, but hey, strange things do happen. At these kind of levels, I'm usually looking at reversal plays. But if I'm doing so, again, you're fighting the trend, right? And so if I am going to ever fight the trend, I definitely want to have limited risk and not get stopped out. And so I would be looking at like a spread or a binary and looking at a pullback by the end of the day. So we'll see what happens. I mean, I'm sort of shocked that we're actually seeing, like I said, the market push this far on a day like today. But I mean, it's pushing right at that deviation level right there on the Russell. And if I go over and check out some of the other markets, we can look at those right now. And we can see the S&P also, pushing pretty strong up there at that deviation level. And let's see, I think all of them are just sitting at it. And natural gas, or not natural, but NASDAQ, it's a little bit past its deviation level there. So, and then we got the Dow. And Dow's sitting right over there at 13,430. It's actually not quite pushed it all the way. But, we'll just keep watching. Now, on the other markets, let's go ahead and pull up some details and just see if there's any kind of possible trade setups left. Right now, I mean, I wouldn't be looking to join in on a trade. If anything, I'd be either doing a reversal or tightening stops. If it keeps going and you're long, well, then just keep riding it. Like I said, I went long on NASDAQ earlier today, and would have liked to go on even earlier. But went long, it went well. And check out a couple other ones here. We got the... I'm going to pull them up, and we'll just look at the deviation levels across the board, okay? And the deviation levels, what I like to do is, instead of using like the historical standard deviation, that really doesn't mean much of anything because it's based on historical price movement, I like to look at implied deviation, so how far do they expect the market to move, okay? And so let's check out, we got something like, gold, which has been going crazy today. So let's check out gold on the deviation levels. Gold sitting up there at 1780. And 1780 is right past the 1770, and then it's in between. 1787 is the next deviation move, and it pushed up to about 1784. So it looks like today at the high right here, 1783, and so just a big move with all the stuff that's coming out there. So not really even a great, huge, big play, but you can tell it's definitely run out of steam, and it has run out of it right there at that 1780 level. And let's go and see if we can find an even better possible setup. All right, we got copper with all the home sales coming out and everything else. Had a big drop and then ran up like pretty much everything else did today. And on copper, it is sitting right now at 7.743, and we had a 7.749 deviation. And we actually, looks like we hit the deviation and stopped. The high is 7.7485. So I mean, like right there, and stopped right at this deviation level. So this would be a short copper setup potentially for you that you could check out. And let me see here how much time we have left on Nadex for a copper play, and we'll see if we can have a nice trade. We can go in and maybe take advantage of bouncing off that deviation. You love it when you get them right at the deviation, when they're really respecting those levels. And so I'm going to see if we have any possible plays left on copper. It's like copper is expiring here, so not going to play the copper play. So let's just keep on moving on down the list. All right. So that was our copper play there, and we'll go over, and we already checked out the other metals there with gold. But if you are looking to trade copper outright, definitely still have a setup there for you. Silver, if you're doing that one outright, and or if you're using ETFs or whatever, then let's see, we got to move. Let's see, right up here to about 34.81, and so looking over here at silver, 34. See, 81. Man, that moved right up to just past the deviation. It's sitting right out at 34.59 as the deviation level on silver. And so that's a potential short right there on silver right now. And or take profit, stop loss, whatever, tightening your stop. And let's check out the natural gas, because natural gas has definitely been moving and shaking here lately. And on natural gas, what do we got for our setup? We got to move up to 3.318. And that basically busted right through that one deviation and then turned around and started coming on back down. So natural gas would definitely be a setup that is still open for play, and we can check that out and see what we got. So on natural gas, let's see here, we don't need all this other stuff up, just keep it clean and easy. So natural gas, go in on we'll check the binaries first, okay? So commodities, binaries. Then we'll click on natural gas. Just want to check that. Yeah. All right. So we'll go over here to natural gas, and we'll go to daily, and then we're looking at that deviation level. It's coming down off of that 3.271 right now, which is down to about 3.721, and see how that might work out for us. what would be the ideal setup. So on that, we got to move, let's see here, 3.280. You can see like there's not, like they don't expect it to move up at all. Just look at this, how there's like this no quote above the market right now. 3.276, make sure we are looking at the current month on natural gas here. And we got the November contract. It's always important to make sure you're matching up the right month. So 3.275, we got 3.280. So that's a 38.50 risk. Okay, so I'll show you this example. As long as it closes below 32.80, then you would make 38 on a risk of 61. So you may not like that trade because of the risk reward. So if you don't like that one, what are your other options? Well, you can hop on down a little bit further, and that's 3.280. So let's go down and look at 3.240. There'd be no reason to do any of the other trades, and because they're all the exact same risk. So $90.50, and basically what that means is you're risking $9.50 if it closes below 3.240. So what is 3.240 on the deviation chart, and how does that play out in a way that might be able to actually help us? So on natural gas, 3.240 would actually bring us almost back to a gap fill below the half deviation mark. We're going to go ahead and we're going to grab this and just place the order there so you can see that, see how that works. And it's very small risk, $9.50, $90 profit potential. And there's a couple different ways that you can trade this. Okay, you could go in here, and I'm in, discount, but you can go in and let's see. Let's see here. Well, now what we'll do is we'll click on working on open positions, and we'll click on natural gas. And maybe we'll take there's only a couple contracts on here. This is a demo, so live account has a little more built into it. But we'll do that. We're going to take out both of them. And now we're going to say, you know what, I want to take, since I'm risking basically $20 total, then if I could get back $20 on one of them, all right, so I'm going to buy one back $20 lower at 70. So now if it just gets down a little bit further, I can actually profit on this trade, and if it goes all the way, I can, I'll make a couple dollars on this trade if I buy this one back. Now if I leave the other one on, I could actually make $90 on it. So first I'm trying to remove my risk. Next is I'm trying to make profit. So can I remove my risk, my initial risk, I guess would be the best way to put it. And the next is, can I then make a profit on the trade? And so I want to get rid of my risk and have a potential profit order in there as well. So that order is sitting there and I'm doing well. And what we'll do is we'll set the remaining one, okay? And we've got to adjust this to 1 because it's going to automatically set it for 2. So let's set that to 1. We'll set the remaining one, we can put it at $50. So that gives us a $40 profit on the trade, plus the other 2 being closed out with a small profit on those. So that actually work out pretty well. Hit place order. And now we have 2 simple binary trades in. Now what about spreads? Are there any spreads that might actually work well for this trade? So well, right now, looking at the natural gas on the spreads, and let's just take it all the way to expiration. And let's see if there's one close to where it's trading at. It's trading at 3.281 at the moment. So 3.28 is what we're really looking for, something that's going to be really close to that. This one will have a pretty low risk, $26, $374 profit potential, so not bad at all. If it expires where it's at, then we basically got our $26 back. If it moves up a little bit, we could lose a little less, make a little more, but that's basically our risk and how it's set up right now. So that's one example. You could go in, you can place that trade. Now the next one you could go in and check out is, you could check out, there's that one. There's also one other one over here, the daily spread, to see if there's one even closer, but there really isn't. So in this case, the best option, 8 to 230, is going to give you that lower risk, and that basically puts a spread of 2.9 to 3.3 on here. So what does that mean on the chart? Well, if I go on and I add a rectangle to the chart, most charting programs have this built in, and I sold a 2.9 to 3.3, so I'm going to go up here to 3.29, okay, and up to 3.3, so we'll go right there, there's 3.3, and then we'll draw it on down here, it goes way down, and then I can double click on it, edit it, whatever. So we'll edit the properties of our rectangle, and we're going to make it a rectangle that's equal to the box. So it started, of course, when we got in. It'll expire at 2:30 or 1:30 Central Time, 2:30 Eastern Time. So we'll go ahead and make it expire out there at the right time. And then the floor is down to 2.9. So that'd be a massive move. And the ceiling is up to 3.3. And then we're going to hit OK. And basically now it plots it out for us so we can see it. It'll keep track of that. And this shows us, okay, we can't lose anything above this. We can make money all the way down to here. Okay? So very simple. That's why we call it a box. It basically makes a box when you get in, when you get out. Is left side, right side, and then the floor and the ceiling. They're very, very simple to trade. If you're selling copper, you're selling the box. If you're buying copper, you're buying the box. The trick is when you're selling, you want to sell one with the ceiling close to you, so you have low risk. When you're buying, you want to buy one with the floor close to you, so you have low risk. If you get down that simple rule, then just buy and sell just like you do anything else. Okay? And that's the main thing that you're going to be focusing on. So that's natural gas. And we can check out a couple of the other potential plays and see what we have set up for us. Let's go ahead and look at, I know some of these things are moving like crazy, but let's see here. We got crude oil. So let's check out crude. It hasn't had a mat. It's basically flat right now, but it did have just a big jump over there. And on crude, we have a move up. One of my favorite things to trade reversals on because it is so uncannily like right on. And it had a move up to about 92.30 right now. And on natural crude, 92.30. A little bit past it, it's sitting at 91.93, which is right at a one deviation level. It's chilling out. I probably wouldn't touch it because we're not seeing just a whole lot. So I'm backing off at crude right now. I'd be taking profits if I'm long. And hopping on over, checking out some corn. And corn has been just, it's just been falling. And so if we check that out and look, it came down to 711.75. And over on corn, that's a move. Basically, it's a little past, just past a one deviation move of 712.51. So it basically came down to that, spiked against it by about a point, and then pulled back. And so it looks like it's done, and I don't see it rallying. So at this point, I don't see it necessarily falling either. I see it staying pretty flat. So what can you do when a market's staying flat? Is there any trade setups that could work well? And so let's check that out. We got corn sitting right now at 714. So different ways to trade them. Well, binaries are great for flat markets as well as trending markets. But for flat markets, check this out. We'll go over here and we'll look at the shorter term binaries. Okay? And we got to see if we find some that are going to be close to the price. Because they're not right by the price. They're not going to help us out that much. And let's see here. We're going to close that down. Let's check out corn. And yeah, we're left on the dailies, but we're so close to them expiring at 2 o'clock, we can see some big volatility. And so we want to look really close. And we got a 717, 715. And now you're not looking for it to actually break these prices at this point in the day. Okay? What we're looking for is a low risk trade where we can get in and get out pretty quick. So like if I could sell this for 80, I could buy it back for 70 if it moved down 2 points. And that basically give me a $20 risk. Or on the flip side up here, if I could buy this for 26, I could get out of it. Literally just a few point move. I could sell it for 38, so I could make $10. So I'd probably need about a 6 point move for this to be worth it. So at this point, I'd probably even avoid the corn markets. So just going through them and seeing them, you got to find the right trading opportunities, and don't trade just because you're antsy. Trade because you find the right trades. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, got a comment over here on Tiger Den, just looking at IWM, and basically talked about how it ought to be capping out right around 84, and looks like it did spike a little bit above that. But in that spike, we can see there's a massive volume. Went up to, literally an insane amount of shares, over 1 million shares in a matter of just a few minutes. And but that was after the rally. We're literally in the middle of lunch hour. That usually is what I call basically a volume spike take profit. Okay, so what that means is floor traders, etc., are going in, and that last little bump. Okay, people start going for that 84. Like, oh, it's going to bust out. They go in there, all those orders are sitting up there. All those buy orders are sitting above 84. And they need to sell, right? Because they've been buying and they need to get rid of their shares. And so what they're doing is they're now dumping their shares off to everybody, and that's what they were doing. And so we ought to see it, pull back at this point, basically stay flat. I don't really see it just flying really much further. So with the day, I mean, it can definitely bust a deviation level, but a lot of times it'll basically just chill out for the day. And once it hits a deviation, or it'll do a full-on reversal. So we'll see how it goes. But, anytime you see those big volume spikes, that's a big clue to start tightening your stops and take some profits, because usually that's profit-taking, not trend confirmation. Okay? And that's one of the things that I've noticed, I know a lot of other traders have noticed, is volume on intraday charts, specifically, really seems to happen at take-profit levels, at reversal points. So now it doesn't mean it's going to like reverse and just crash for the rest of the day. So I'm not saying it's a reversal indicator so much as I'm saying it's a take profit point, meaning at that point things ought to stop continuing and they ought to go pretty flat or choppy. And at the very least they ought to do a pullback before if they were going to continue the trend. So, but yeah, definitely watch out for those volume spikes. They're a great indicator for when to tighten your stops. It's one of the best things you can use is when you see big volume spikes to start tightening up your stops. And you'll be amazed how much that will help you whenever you see those. And you can go back and just look historically at just volume spikes and how they're closing out positions. Let's see, like midday. And you'll usually see them. That's actually one of the things I use a lot of times to stop trading is when I see a volume spike in the lunch hour. And I was like, okay, they're done. And, the floor traders are done. They've walked out. So like the market's falling down. All of a sudden you see the spike up here. And where it's exceeding sort of the average volume. And you see it like right there. And then all of a sudden it drops. And notice how it sort of goes choppy. So if you're short, that's a good point where you want to start tightening your stops up and not necessarily adding on to additional short positions at that point, because that's a good chance that you'll see a slow reversal or it going choppy. Like I said, at least a pullback. And as you can see, it basically, it did a little pullback. It came back down. And what happened? The exact same levels. They started taking profit. The people that wish they would have got out were getting out right there. And that's a lot of people that coming in and saying, it's back to my level, now I can get out at break even, because they went short here when they saw all that volume and all that move. And so it went against them and it came back and they're like, okay, now I can get out. And they got out and everybody's getting out and boom, it rallies back up right at the end of the day there. And you'll see that that little trend just over and over and over again right here. Looking a couple days back, you can see the market falling, then bam, it moves, and also it's massive volume compared to previous volume. And they've taken profits. And now you notice that there was a trend at the end of the day at 2 o'clock, but if you would have tightened stops here, you would not have been sad, right? So you could have tightened the stop, you could have left it alone, but you would not have been upset. So you can definitely tell the market did go flat at that point, and then a few hours later decided to go ahead and continue the decline. But it's a great take profit zone. It's not necessarily where you want to be hopping in over here. So looking again, right around 10, 11 o'clock Central Time, market's flying up, see the volume spike, boom, tighten your stops again. Anyway, so use that volume. That's probably one of the number one tips I can give you. I hope you can take that away from the show today, and I hope y'all have a great day. I look forward to seeing y'all guys in Tampa, and I will see you Monday.